Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, March 11th. Well, we did get the bounce that we were looking for, right? And then markets sold off again yesterday. So it looks like the markets are at least in trouble in the short term. So we want to keep everything in perspective. So I want to start looking at the weekly charts and see where they are, along with some of the indicators, and see if we're at some of these washout levels, okay? So I want to dive right into this. Now we have the NYUD, which is the advanced decline with volume. And if those of you who follow me for a while, you know I like looking at this. We're getting into a washout area here, negative 188.27. As you can see, anytime we get these areas, we're pretty much due for a little bit of a bounce here, okay? So that's one indicator. But you could see we could still go lower, right? Now let's go take a look at some of the volatility, what's going on here. As you can see, we haven't really moved too much out of this volatility where we would be spiking, and I like to see us into this anywhere from at least the 25 to the 28 area, 29 area. We're not even there yet. So to me, I think that there's still some further downside, and it doesn't have to happen every single day. But if you can see that volatility is starting to expand a little bit, that means that we have fear coming into the markets, and that also means that we should have some additional selling pressure here. Right? Now look at the VIX in itself, VIX on the daily chart. And I circle these little spikes here. Every time we break out of the Bollinger Band and we close back in it is a sell signal for the VIX, a buy signal for the market because it's inversely correlated like you see here and here. We're not there yet. You can see that we're sitting right on the 20, which is the 20 moving average of the Bollinger Band. We need to break outside and close outside it. Now if it closes outside it, that doesn't mean that it can't continue higher until we get a close inside the band. That's where the trigger comes in. So we need a daily close out, a daily close in, and that would be a sell signal for the VIX, a buy signal for the market. We haven't gotten there yet. So that means to tell me that we still have plenty of room to run as far as volatility is concerned. So I do think that there's a little bit more downside. We really only had 2 days of downside pressure. So 2 days is, where it might seem an eternity the way the market has been headed the last 4 years, but this really isn't much of anything. So you can see here the MACD still has plenty of room to run before it's oversold. Same thing with the stochastics. It hasn't even reached oversold territory. So this to me has a little bit more movement to the upside. Again, putting a sell signal into the market. So we have the NYUD near washout areas, right? We have the VIX and the SPX ATR not even close to being washout areas. And then we have the bullish percent SPX, which now gave us an official sell signal, right? I'd like to see another day or two where we get it really separation here from the bullish percent. Once we get that movement away from this 8 moving average, then that just kind of entices me even more to say that, we should be headed a little bit lower, okay? Now, I'm going to show you the charts now, but I want to just show you here since it's real simple. This area here at 1975 is really going to be the line in the sand. This is the horizontal area where we started early December going into pretty much all of 2015 so far for the first 3 months. We haven't gone really anywhere up until the first week of February, and now we've obviously gave it all back. So we want to see where that is, but 1975 in the SPX is going to be a big number. That's going to be the line in the sand. If we start closing below and making lower lows below that 1975 area, then I think the markets are pretty much going to start going into correction territory, not just a normal pullback, okay? Now, I wouldn't say let's fall in love with the downside here as far as getting all excited. Not yet, but we want to make sure that we have a confirmed sell signal in the market. And again, guys, 1 day down, 1 day up, and another day down really doesn't say anything. That doesn't mean we can't short for the day. The problem is that markets are moving in the pre-market, and most of the move is happening in the pre-market hours. And hence, I wanted to show you the Spiders 5 minute. We gap much lower. This was the only move of the day right here. Okay, and I'm not a counter trend trader. I like to follow the trend for the day. This is the only really move. You could see here we did nothing the rest of the day, and then of course we just kind of puked out the last 5 minutes of the trading day. So not a good sign when you get markets that are moving in the pre-market. It doesn't give a lot of opportunity intraday. Okay, when you're trading, when you're day trading. So again, this little move and pretty much the day was pretty much over with. Okay, now let's take a look at the week. Let's get into a little deeper thing. Now remember, it's only Wednesday, and we still got 3 more trading days. But we have officially right now during midweek broken this long-term uptrend line from 2012. Okay, this could be significant. If we break this on a closing basis, and then we need next week to confirm that taking out that low, then I think that you could see that that 50-week, and then you could see some of these pivotal areas, these pivotal lows here, where we could actually start to tag if we get a meaningful pullback. Okay, but so far the weekly chart, it still needs a little time. We did break it. I don't think it's much of a concern. We're sitting on the 20-week moving average right now. So it's okay. It looks like it may be in trouble, but we won't know until the end of the week. And, of course, on Monday I'll give a full analysis. Now, daily chart of this SPY obviously looks pretty miserable, right? We had 3-4 days really not doing anything last week, and then, boom, we break down on Friday. Monday we trace back 50%, which I was looking for. And then I was looking for yesterday, titling the video, looking for a continued move lower, and sure enough, we got it. Unfortunately, this move all happened in the pre-market, okay? Meaning here, and then we just kind of dumped pretty much that one time, and then we went sideways. So we're not, again, still looking for some washout areas. MACD stochastic's not even oversold yet, so we have plenty of room to run. Now, we broke this 50. That means that the markets are in trouble here on the daily chart. Okay, this area here, the next step would be that 200-day moving average. So call it 275, 201. And then if we break that lower trend line area, that lower bottom of that horizontal channel will be your next bet. But right now, the 200 is looking in place here where we're going to tag that 200-day. Okay, let's take a look at the transports. And I mentioned to you that transports are weaker. They've been weaker than all of the other indices that we follow. And again, it is the leader. And you can see here clearly, and which coincides nicely with the 50-day moving average here, 50-week moving average, excuse me. So it's holding up relatively well on a weekly chart. So the next step really would be this local area here of 155.65 or the 151.20, call it 152, if we were to come down to this area. This is going to need to hold as well, okay? Daily chart looks terrible. As you can see, we are in a full-fledged downtrend right now on the daily chart. We actually broke below the trend line here, the lower channel here. So that's not a good sign. If anything, this is going to be the next step. Will be the 200. When it gets down there, this 200 should coincide nicely with this horizontal area of support. That's going to be really your next target, guys, in the transports. And if that does happen, it will take the other indices as well. XLF. Here's another problem here. We have the banks and financials starting to do really poorly. We tried to break out at 25. We did not do so. Again, weekly chart looks fine. We're still above the weekly trend line from 2012. So it looks okay. Again, a pullback is healthy. What happens is the pullback sometimes turns into a full-fledged correction, and that's what we need to see and determine. Too early to tell right now, okay? Take a look at the daily chart. Daily chart looks horrendous. We broke down from this little horizontal trend line, little channel like I mentioned. We took out the 50-day moving average. Next step is the 200, and more than likely, it's like a magnet. It will get to the 200-day moving average. Unless something really exciting happens to the market, the dynamic has changed from everything being positive, whether it be good news, bad news. Now, people are starting to digest, looking for a reason to sell, okay? IWM weekly. Okay, holding up pretty well here. 120.40, we lose that on a weekly basis. We're back into this consolidation of 2014. Okay, so that is not a good sign. But right now, it's fine. So the weekly chart in a Russell is okay. Now, the weekly chart, the daily chart, actually, Russell held up much better than the other two indices, the other several indices, actually, that we were looking at. It is now above, still the 20. It's the only one above the 20. And we had an inside day from the previous day. So you can see Bollinger Bands are still contracting, so the next step would be that 50-day moving average if we were to lose to, I believe, Monday's low. If we lose Monday's low, then I think we're going to see some more downside in the Russell. Now, again, the Diamond, same thing. We took the 50-day out. Next step is inevitable, would be the 200-day moving average. Again, provided that we get some further downside. And lastly is the Qs. And you can see technology really starting to take it on the chin here. Its next step is the 50, and then, of course, we're going to be looking for some of these horizontal areas of support, which would come in about 104. Okay. All right, guys. I hope that helps. Listen, remember, when you're day trading, if markets have moved already in the pre-market, you have to be patient and wait for a certain setup. If it doesn't happen, it doesn't occur, there's no reason to look to get short something that you're just going to get stopped out in, okay? Especially when you have pre-market movement. And I know it stinks because we like to get in, especially when you're day trading. Now, if you're coming in short for the day, obviously you're making some good money, but you got to take the good with the bad when you're day trading and when you're swing trading. Have a great day, everybody. We'll speak to you tomorrow. Take care.